Hey everybody, welcome to Trading Capital's exclusive analysis. In today's video, we're going to be discussing two asset classes. We're going to be discussing natural gas primarily in this video and why I remain bullish in this particular asset. And then we're also going to be touching base on Bitcoin and the crypto markets. So first off, natural gas. Overall, everyone knows we've broken outside of that wedge pattern. That is absolutely bullish. The big level we've cleared are these pivots, and we're actually bullishly consolidating above this pivot zone, or basically right on that zone. So what I'm observing here on the daily chart of the natural gas futures chart is we had a beautiful 3-bar surge move up off of the low. You actually pierced and made a new low. That's why I remain so bullish. The fact that the market makers pierced this major support level and it got a lot of people to finally capitulate, and then they reversed it and followed it through with two additional surging green candles, completing a beautiful 3-bar surge above the short-term 7-day moving average. That is absolute beautiful price action. That's what you like to see in a capitulation double bottom sort of scenario. And this is a beautiful double bottom because there's more than basically 21 days in between this pattern, which makes it that much more stronger on a technical picture. Now, what I'm noticing is you had your beautiful move up. You had a heavy sell-off, people taking profit, because remember, this is not an easy trade. You're going to have a lot of people that saw this move up get scared. As soon as you have a little move up, they're going to take their profits and run. And there's certainly still a lot of shorts in this particular asset class, and a lot of people are obviously thinking that natural gas could go even lower based off of the overall downtrend. And that being said, it is a vicious downtrend on the much larger time frame, but you have to still respect the levels that we're trading at. And obviously, at some point, all downtrends end. And when you look at what type of pattern this is on the monthly chart, and you realize that you're hitting beautiful monthly retraces, a beautiful monthly bottoming tail on heavy volume into a huge reversal candle here, major consolidation zone. These are the levels we have to take shots at. In full disclosure, we are long nat gas. But you can clearly see that this is a beautiful, powerful weekly pattern that is potentially going to play out to the upside here. Now, what we want to see from natural gas is to continue to build along the 7-day moving average. The one positive aspect that I like is you had your heavy sell, bounced off of that 7-day moving average. Then the next day, the market makers tried piercing that level. It was bought back up and closed back above that 7-day moving average. And then again today, you had that level pierced earlier on, and then it was saved and bought right back up. So we're now almost at an inflection point where the 7-day moving average was acting as massive resistance in this clear downtrending move. Also this massive downtrending move. But now we might be at a point where it's flattening out, accumulation is occurring, and now that previous mega resistance can potentially become a big support level. And just off of these last 2 days, or actually 3 days of price action, that's what I believe we are seeing. We're seeing the trend slowly starting to reverse on the larger term time frames. You have bullish divergences occurring on a couple different indicators, and I do think that accumulation is starting to occur in full force. So I do think it's interesting to see how natural gas is going to play out in the near term. Let's move along to Bitcoin. So Bitcoin and crypto industry as a whole has been under immense pressure. You had a beautiful 3-bar surge, almost to a low. You are coming into some consolidation chop. I still have a potential for it to flush down to around 26,613 before you get a bigger technical bounce. But needless to say, Bitcoin is now looking a little bit more vulnerable. Let me just remove some of these charts here just to clear it up. I'm going to clear up this whole chart and just redraw a couple of these patterns. Basically, the big level on Bitcoin is going to be, first off, this major pivot. That's what the bulls absolutely need to keep. You can't lose that pivot. Obviously, we're still quite a ways off from that level. The next big level that I am watching is basically this pivot low over here. If the bulls lose this consolidation zone over here, you're testing these pivot highs over here. So that's the big range. I do think that if Bitcoin flushes into this range, it is likely going to bode maybe a small bounce, maybe back up to about 28,000 before I do think it has a bigger leg to the downside. So naturally, I may be playing Bitcoin on the long side with my members just for a quick short-term trade. It is higher risk considering it is having a pretty hard reversal. And notice this breakout zone over here. The reason why I'm turning exponentially bearish on Bitcoin is because you're losing this breakout zone over here. If you get a daily close, now there's still an hour and 27 minutes, so anything can basically happen. You could get a bounce. But if you lose this weekly reversal signal over here, that is not a good sign for Bitcoin. Basically closing the week, which will be in 2 days, will be a better indicator. But if you lose this wide range green bar breakout, that 200 weekly moving average might be your next big support level confluencing in this area. So definitely be mindful. Bitcoin is into some big profits. I actually just covered my Ethereum short with my members, ETH USDT, for a nice little gain. So we just covered our Ethereum short, so full disclosure on that end. But I do think that there's still a potential for more downside after a technical bounce occurs. So I'm just waiting to see how crypto progresses. One of the reasons why I'm a little bit more bearish on Ethereum is because you had your big move down, you had one consolidation day, and you're having another sharp move down. This consolidation day may take Ethereum a little bit lower. I do have a big support level at 1763. You can see this major pivot zone over here. That's going to be a big level for Ethereum to hold. And notice how on Bitcoin, you'd never had a consolidation day. It's just been a 3-bar surge down. So Bitcoin is actually more likely to yield a little bit more of a bigger bounce if the crypto market as a whole gets a bounce. Let's just look at the whole crypto market just for a quick second. And now I'm going to throw on some moving averages as well. We'll throw on the 50. We'll also throw on this 365-day moving average at the lower end there. Notice how we're tagging the purple trend or moving average over here. That is the 50 daily moving average. It's in a beautiful 3-bar surge. You're into this multi consolidation zone. This is your previous breakout zone. So technically speaking, the overall crypto market is now at good daily support. This is actually a day tradable level, a small, very quick, nimble, swing tradable level for the crypto market. But just understand, if you lose this consolidation zone, then your next biggest support on the total crypto industry is going to be this $1 trillion whole level. That is your 365-day moving average. Let me just remove all of these trend lines so we can clear that up. The 1 trillion level, this orange trend line, is your 1-year moving average. It doesn't get much simpler than that. Obviously, if you keep flushing lower, you'll have some support layered in around this pivot zone over here. You can see it confluences right around that $1 trillion mark. That was your big FTX collapse. That's a big line in the sand that the crypto market needs to hold in order for crypto for likelihood of crypto to continue to building a base and moving higher. But right now it is looking heavy. It's looking vulnerable. It's certainly had a big decline. I mean, just in the last 3 trading sessions alone, the total crypto market cap has lost 10% of its value. And what this could be signaling is we have to keep this in mind that crypto is just, I use it as a liquidity gauge, a form of liquidity. Often crypto does have these instances where it will lead and lag the price action. I believe crypto's in a phase of leading the overall price action. And when you factor in that crypto is definitely a risk asset, meaning that when there's less risk in the overall market, it's going to rally. And what this could be signaling to us is that we're on the near-term precipice of seeing more risk coming to the overall market. And I do think that the overall crypto market is definitely a powerful gauge to use against specifically the NASDAQ and a lot of those risk assets in the overall tech space. So if you've enjoyed this analysis, please give this video a big like or a comment down below. If you totally disagree with my analysis, I am more than ears to hear your opinions and thesis. It's an overall market at the end of the day, and neither of us will be right all the time, and neither of us will be wrong all the time. It's just a matter of trying to be right more times than not, and just that's why I use the charts and the overall price action. And overall, we banked a nice little winner with our team over there. So we have also closed a few of the trading stocks, like crypto stocks like Coin, for a nice winner. We were able to bank a double-digit gain on that with our members. We were also able to bank a double-digit gain with our members on this Riot short, having shorted around 1247. So there's lots of opportunities if you're reading the charts to try to bank these trades. And certainly the crypto collapse in the last 3 days has been definitely a profitable move for our members here at TC and our personal accounts. On that note, thank you all for tuning in, and we'll see you on the charts this weekend.